Welcome back again to Strongman Personal Finance. Welcome back to my channel, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Links in the description. And apparently, according to all you commenters, I'm the same thing as Jeremy LaFufu and Meet Kevin. As a matter of fact, I think I make LaFufu noises better than LaFufu. Anyway, I really take offense to the idea that me and Jeremy Financial Education and Meet Kevin are the same thing. Now, what started all this drama and stir was that I put $1,000 into a JD.com stock. $1,000. Why did I do that? Well, I did a discounted cash flow analysis a long time ago, and I said if I wanted a 15% return over 5 years, what would I pay for JD? And according to my calculations, it was $62. Now, JD just got freaking decimated because their revenue didn't grow as fast as expected because there's a slowdown in the Chinese economy. Oh my God, really? And the stock freaking tanked to like 52. So you know what I said? I said, you know what? Yeah, I have 95% of my portfolio in index funds. And yeah, I should be focusing on maxing my tax advantage accounts. But guess what? This is a freaking steal, according to my calculations. I've been waiting and waiting and waiting, and I've been tempted to buy JD, but I never quite pulled the trigger. And then, when it dropped to 52, holy crap, I was like, you know what? I'll chuck $1,000 into it. Now, apparently, me putting, God, what is it? 0.25% or less of my portfolio into a stock makes me the same thing as Jeremy Financial Education. So let's compare our channels, and then we're going to compare some stocks that I buy, and some stocks that Jeremy Financial Education buys. So if you go down my channel, it seems like the typical YouTube channel. You got the shock face and the clickbait thumbnails. But if you notice, almost every video, I tell my fans they should be maxing their tax advantage accounts and buying broadly diversified total world index funds. Because that's what I truly believe works and builds wealth long term. Okay? And damn, look at these thumbnails. Woo! Thank you, Nate. You're doing a good job. You better send me some more thumbnails. I'm actually planning on going after Chris Sain a little bit too, but I need my thumbnails, Nate. So that's the focus on my channel. Okay? Now, compare this channel, and we'll compare it to Jeremy's thumbnails and Jeremy's channel. Jeremy is all about putting massive positions into highly unprofitable growth stocks, small cap growth, okay? Because in his mind, if the revenue goes up, that means buy the stock. I look at profitability. I can project future cash flows because I have a sense of how profitable these companies are, okay? I use reasonable growth assumptions in revenue, and I apply some metric of profitability, and that's how I calculate the future cash flows. And then I discount them at a 15% rate of return because I'm not buying an individual stock unless I can get an outsized return, okay? Compare that to this clown. There is no comparison, okay? He puts his entire portfolio into just a couple stocks. I put 5% into a couple stocks, okay? The rest is in broadly diversified index funds and tax advantage accounts. Do you think this clown has ever spoken about tax advantage accounts? I'm sure he has at one point and gave some half-hearted explanation for what they were. But he's not about that, okay? He's not about getting rich slow. He appeals to people that are lazy and impatient and want to get rich quick. What stock can I buy to 20,000x in 5 seconds, bro? That's what he's going after. If you look at his freaking scammy Discord and course or whatever he freaking does, if you look at his advertisements, he's got like these nice cars behind him, okay? He's trying to give the image of flashiness and get rich quick, which is not how you get rich, okay? Now, his stocks have been decimated. And my stocks, some of my stocks have been decimated, okay? Why? Well, for two entirely different reasons. His stocks have been destroyed because they have no fundamental value whatsoever. They have no profitability. A lot of them have negative cash flows, and they're complete and utter trash. When a stock has no underlying value, it's hard to value it. And that stock can basically go down to zero if it goes out of business. My stocks are also growing revenue quickly, just like his, but they're profitable and they actually have an intrinsic value, okay? So let's go look at Alibaba. So Alibaba has been freaking decimated, okay? I am down 50% on this stock. And guess what? I don't freaking care. I mean, look at that. That dark blue line. That's complete and utter decimation. However, I think this stock is irrationally, massively undervalued. And I know that because I projected revenue and profitability. I discounted it and I got a buy point. I think this stock is massively undervalued. And that's my opinion. And you don't have to agree with me, okay? There's also the China risk. I understand that. I don't care. $92 for Alibaba is ridiculous. Okay, I'm sorry. That is insanely ridiculous. This stock can't catch a break, okay? Let's go look at the financials of Alibaba. Now, if you look at the top line of the income statement, that's revenue. You can see in 2018, it was $250 billion. And then you go to 2021, $717 billion. That's pretty massive growth, okay? But that's not what matters. You also want profitability. You go to the bottom of the income statement, okay? Net income to common stockholders. You're a common stockholder if you buy a stock. Look at that. I see positive numbers. Positive 63 million, a billion, 87, 149, 150. And then, of course, the profitability has gone down for a multitude of reasons. But I don't think that's going to last forever. This is a cash flow and positive and GAAP net income positive stock. Earnings are growing year over year over year. That's a good thing. Now, let's go look at J Dizzle my Izzle, okay? J Dizzle my Izzle. Financials. Let's go look at the financials. I don't care about the stock price. Look, 2018, 462 billion. 576. 745 and 900, okay? Boom, 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 boom. Now, is this in Chinese currency? Yeah, it is. I was like, that's a lot. I don't think it makes that much money. Look at that freaking revenue growth. That's massive, okay? Revenue by revenue. We go down to the bottom. Net income for common stockholders. Now, it was unprofitable in 2018, but oh my God, 12 billion in 2019, 49 billion in 2020, and then of course it's gone down, but it's still profitable, 25 billion. Let's compare that to Tattoo Trucker's Taint, okay? Now you tell me, how do you value this stock? How do you value this stock? I don't know, okay? 2019, okay, 84 million in revenue growth, or revenue. 2020, 145 million, and trailing 12 months, 200 million. So it has growing revenue. However, you go to the bottom, and, okay, they have positive net income. That was actually because of an accounting thing. But this company is barely freaking profitable, okay? Oh, it was on an accounting basis. But it's actually highly unprofitable. Look at this. For the last 12 months, negative $5 million, okay? They're losing money, and the only reason they were profitable was because of a freaking accounting thing, okay? This company is losing money, and they have shrinking margins. Let's go look at Honest. Honest my Honest! Another Lafufu stock, okay? We go down. Revenue growth. I mean, actually, trailing 12 months. Oof, not too good. Now, it's growing revenues. Okay. Look at the freaking net income available to common stockholders. Negative $31 million. Positive. Oh my God, they were profitable. Probably because of an accounting thing. And then over the last 12 months, negative $17 million. Losing money hand over fist. Let's go look at Smile Direct Club. Direct my heck! Direct, everybody's gonna take off masks and Smile Direct's gonna boom! Smile Direct. Well, they had growing revenue and now it's still growing, but it ain't doing that well, okay? Let's go look at net income available to common stockholders. Negative, 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 and negative. Oh my God. There seems to be a trend here. I buy companies that I can actually value because they're profitable. Jeremy doesn't do that. He's a freaking moron. Okay, and on top of that, I don't sell myself as a genius stock picker. I buy a little bit of stocks, and the rest of the money goes to broadly diversified total world index funds and tax advantage accounts. And I guarantee you, I will have better returns than that freaking loser, Jeremy Financial Education. So stop leaving little comments. You're the same thing as me, Kevin and Jeremy. The foo-foo because you bought $1,000 of JD. Shut up. Anyway, that's it. I still haven't showered from the gym. I stink. I reek. Anyway, that's it. Like, subscribe, tell your friends about me, and y'all have a wonderful night. Chew.